Welcome to Power Charting. I'm your host, Bruce Fraser, and today we are going to continue our discussion about the Wyckoff swing trading technique. And it is something that we started in your Daily 5 the other day. We're going to reference that. You can go back and watch that and then continue on with point figure construction methodology because we use one box method. And then we're going to have Johni Scan present us with a scan that can find candidates for this style of swing trading. Johni Scan, thanks for being here.
Great to be here as always, Professor.
So we've had a great time working on a scan for this, and it's fun to watch John work. And so just have a look at the disclaimer. And here are notes from the Your Daily 5 episode that was done on June 27th. I'm not going to go through them, but go back and watch that episode in the archives on demand, and you can watch that episode, learn more about the swing trading concept. And I go through these notes as we go because we have some additional points to make. And these are classic Wyckoff conditions for trading. And so this is a bit of a review. And the first thing that we want to do is we want to identify a cause. And I'll show you an example, a few examples of that here. And so the cause is really a preparation phase, which is a trading range that precedes a markup or a markdown, which we call accumulation or distribution. We are seeking the conclusion of a cause because in swing trading, we want to capture the essence of the move right when it's emerging out of a hinge, a pivot, going from a trading range listlessness into a movement, into a trend. So these we look at and we call price pivots. The classic places that we look to put trades on in accumulation are springs, last points of support, breakouts, backups, etc. Show you some examples of how you can read more here in just a minute. And then for distribution, it's up thrusts, last points of supply, breakdowns, ice. In those characteristics, you'll be able to read more about those. So here's an important thing about swing trading, all trading really, and that is that we want a reward to risk relationship of greater than 3-to-1, meaning that for a potential of a 3 multiple moves. So let's say we have a count of 10, we need to have 30 points of potential for to offset the risk potential of where we place the stop. So the stop would be, let's say it's 10 points and we'd want to have 30 points of potential. How do we determine that? Well, we'll talk about that in a second. So stops are very important in all trading, but definitely swing trading. And we want our stops to be precise, tight. We want to raise stops to break even or better as our trade is working. And we use point and figure to determine our reward potential. So we'll show you more about that in a minute, but that's one of the very cool features of point and figure analysis, the horizontal trading method, is it gives us a way to quantify the potential in swing trades, position trades, long-term, near-term, et cetera. And this gives us a way to be able to measure the value of one trade over another. And then we also use vertical chart construction. John, thoughts before we move on? Look at this phenomenal quote here at the bottom. What do you think of that?
Well, that my eye was drawn to that. I'll tell you. I'll be honest with you. I couldn't stop thinking about that. There's a lot going on in the whole swing trading with a point figure charts, and it's a path that requires effort leading to mastery. And we're so grateful that we have you leading the way, Professor.
Oh, well, thank you. And here's the thing. We're in what appears to be a traditional, typical bear market, I always counsel just lay low, close to the ground, lots of cash. Don't trade in bear markets, but that doesn't mean that you can't practice. Develop your skill sets. Follow these stocks, follow these lists that we're going to show you, that Johni Scan is going to show us today, and then identify whether it's position trading or swing trading for accumulation, for distribution, and just keep practicing as we go through these periods, laying low to the ground, protecting your capital, waiting for those great opportunities to trade again. So here is then this beautiful quote: point and figure method reveals the stored energy potential for price movement. And we're going to show you how to do that here in just a minute. So here are accumulation structures. Notice this is a big trading range that's going on. At the conclusion, you get a marking up event. These are the things that we want to participate in. We pay very close attention to the cause building process, but we don't want to get interested in a theme until it's ready to move. And so here is one type of an accumulation structure. Here is another. There are multiple types. These are just examples. And so go read this blog from July 2015, Wyckoff Power Charting. Let's review. You can see these schematics and read a lot more about this. John, any thoughts before we move on?
Well, that's a classic blog. It's hard to believe it's from 2015. It seems like only yesterday that I read it. I still feel the electric buzzing in my brain from reading that blog. Thanks, Professor.
Oh, well, my pleasure. And I was quite young when I wrote that. So here is the distribution definitions. Again, go read this blog from September 2015. You can see, look at the range-bound condition as a top is forming. We've lined these up to the current environment in both the S&P and the NASDAQ. You can see a preparation phase that leads to a markdown. So this is for people that want to participate in the declining markets. I don't recommend it. I think it's very difficult to do, very emotional, but read about it, learn about it, pay attention to these things. And so distribution is a unique animal in and of itself. And here's our little guy from 1906, the 07 period when the market crashed. And you can see he's really trying to recover. He's Mr. Market right there. It says Wall Street on his blanket. Okay. Another unique characteristic, again, check out the blog, but here is a reaccumulation structure and I've written a lot of blogs on this, so go check them out. And here's a causal structure that we can count with point and figure. And then once this cause is done, you get another nice uptrend. A wonderful thing to participate in. So check that out. And so, John, what I wanted to do here was just take a minute and talk about the current market structure. This chart we look at, and we just keep updating it. This is trading through today, not through the close, but this is Thursday, the last day of the quarter. And you can see here, we've talked a lot about how markets tend to make important highs and lows on quarter and year ends. And so line these up and look at these. We've talked about them in the past. We are now in a condition of being oversold here. And that does not mean we get a rally, and we said that we may have to go a few weeks into the new quarter before we really know what's going on. But it's very interesting that we had an acceleration of this downtrend into quarter end, which I think is a lot of window dressing. Your thoughts, John?
Well, very interesting observations on the quarter and year end of things. And it does appear, certainly in this quarter, that people have cried uncle.
Exactly. And this is these big institutions that are starting to really jettison stocks that just don't look good on their balance sheets. And so here is the New York Stock Exchange percent of stocks above their 50-day. This is a breadth type indicator. And you can see it just keeps making new lows in here and here, confirming the downward stride of the market. Now, something that has happened is that there's been an attempt to go into an uptrend here. Doesn't mean a lot. This may just resolve itself with new lows, but it's something to watch going into the new quarter to see if we get something akin to what happened between January and March, where we did have true green shoots that led to really the only decent rally of the year so far. And not that I recommend trading bear market rallies, but we did see this coming, and it was very interesting, and it did give us an upthrust in the market and then a failure. And then here is, John, here is the NASDAQ percent. Notice the difference here, John. Look at lower low here, and look what we're getting here. Kind of interesting, sort of a bit of a green shoot. And so not unlike what happened back here. And so we'll just keep an eye on that. Your thoughts, John?
Very interesting line, but it's something that you really have to think about its meaning, definitely.
Yeah, there's no question. This is just taking like all of the stocks in the New York, all the stocks on the NASDAQ, and just looking at whether or not they're above or below their 50-day moving average as a definition of whether they're in an uptrend or a downtrend. And so when you have 90% of stocks, as is the case at that low on the New York, below their 50-day, that really is a definition of the broad market being in a severe downtrend. And so that's what we mean when we talk about breadth. So we'll come back to that and talk more about it later. But let's get into our swing trading workshop. And here we have a couple of stocks that we'll just profile. You can see here a big cause. Now think about accumulation structures. And you can see that we have two swing trading accumulations right here, and then we have one here. And so this one is 12 columns across. This is a one box reversal method. So we're doing one box reversal, traditional scaling, and we have 12 columns across from the point at which this low right there starts to turn into an uptrend to this place right here where a low is put in an important rally that sets the trading range. And so that's how we determine our count, is to look for those key levels. And we just take and add 12 to 38, and that gives us a count to 50. And then here we count from the count line, which is 41, and that's 53. And that puts us right here. And look at where it just took us right to the level where another correction set in. That's swing trading. And then here we have 10 columns. This is the point at which this last test takes place and then produces a new uptrend. And this across this area here takes us again back to 55. It did pause there, but look, it's gone much higher. And this is where we want to get into the idea of building a much bigger count structure. And so this is probably the reason that we had this count exceeded, but that's okay. If we focus on our swing trading characteristics, we can always come back to these names or consider them for more position trading. John, you put this stock in your newsletter a few weeks ago. What a great idea this was.
Well, it was moving very strongly against the market for some period of time. And indeed, I did buy some of the OLLI stock and returned aggressively over the first week or so that I owned it. It's, of course, pulled back now, but it's finding support at the 50 SMA. And look at the volume drop off on that retracement. That's very encouraging for a longer term position. And hopefully we've got the gas in the tank on the longer cause analysis.
And also note the extremely strong and accelerating relative strength right here. And that really is a sign that the stock is true leadership because it's making higher highs, higher lows, and doing all the characteristics that John picked up in his scanning technique. So really, really good case study here to watch, and with a big cause, by the way. So interesting. Let's just do one more, and then John's going to show us a scan. And here you can see ResMed. Now, here, this is a potential count. You can see, and I'm counting across these columns. Each one of these that's below 200 is 2 points, and then each one above 200 is 4 points. So I know it's a little complicated, but we can come back to this at a later time. This gives us 36 points of cause to count, and this gives us a potential up to the area of 232. So that's our larger count, 226 to 232. And so you can see that's right into this area right here. And this is a beautiful structure. The key here is to see whether or not it can exceed these prior peaks right here because it's extended on the upside. So we either want to see it pull back a little, and that might be a good entry place, or we want to see it come out and pull back. And John, your thoughts?
Another very interesting stock. We're forming a structure at the lows, which of course would be an original accumulation if it succeeds in breaking out above the structure. And those are where they start. So very interesting.
So, and the last thing I want to show is, and also note this, look at this beautiful distribution right here. So, and we would count right to here because this is the high where the reaction sets the range. So there's the high and the low of the range. And then it comes up and tests this area here and here. And then it just breaks down. So these both are interesting places to put positions on. Again, this is for people that have a short selling orientation. I don't recommend it per se, but here's your count structure here. And then look at the beautiful decline that comes in and then sets up this beautiful cause. So distribution counts, accumulation counts, and then notice this is the distribution here. And look at the relative strength failing throughout. So that's what we would look for in the distribution characteristic. And the last thing I really want to show is the how you can use the StockCharts predefined scanning tools for the purposes of finding interesting ideas. So we go to predefined scans and look at down here, we can go, there is candlesticks, and here we are in PnF patterns. And the ones that you might, and I'd look at all of them, but bullish triangles, and here's the New York stocks and the NASDAQ stocks. And then here we have triple top breakouts and quadruple top breakouts. And those often can be, the quadruple top can often be a causal reaccumulation structure that's just being exceeded. So I want you to go in and look at these and see if you can find candidates that are interesting. So a nice predefined scan to work with and check them all out. They're all interesting. And here are the bearish ones down here. John and I are going to do a scanning special here in the middle of July, July 14th. And I'm very excited about it because this is even though they call it part 4, This is designed for people that are advanced scanners, newbies, anybody that's interested. And John's going to go into some very special, unique tools, ideas. John, tell us about it.
Well, Scan 4 is focused on a concept of looking less, seeing more. For the busy folks out there, you really get the opportunity to hone in what you want to see, and we're going to show you how to look for that. So that's coming up, as Professor Bruce mentioned. Of course, we're hosting that in July. Let's take a look at a real simple scan that embraces some of the concepts we're going to talk about in Look Less, See More scan series. This is a very, very simple scan, and it's just running on the S&P 500 right now, very limited universe. Looks at the percent relative, so stocks that are outperforming the SPX and stocks that have a positive slope on a 10-period signal line for the on-balance volume. Signal lines are like moving averages. So over 20 periods, we look at the 10-period signal line, and it needs to be positive also. We're going to rank by the rate of change. And I want you to note that no scan term that we use here has really any relation to price. It's not pinned down to a close. It's not at a certain level. These are scan concepts that I refer to as unbound scanning. And they give us the opportunity to seek the character of price movement rather than its location. We're going to cover that, plus how to find its location. We're going to do that through the vehicle of dividend-paying stocks. So anyone who likes to play with the dividend stocks, going to be a big section on that here. And we're going to cover portfolio and watch list management too. Isn't that exciting, Professor?
I'm very excited. I can't wait. And I've seen some of the work that is being prepared for this. I'm excited. Let me also just say here that when I look for swing trading candidates, I'm looking at this S&P 500 stocks. I'll look at all 500 of them. I'll just look at the point figure charts. If something looks good, builds, it has a cause, then I go in, I look at the vertical chart. But note here, these two characteristics in this very elegantly straightforward scan is that it's strength against the S&P, very important, and it's also the ability to show rising volume on an OBV basis in its advances. So it's rising OBV, rising volume on balance. So very useful features of a swing trading candidate. Carry on, John. Thank you.
Yeah. So when we run this scan, we got about 50 prospects, and let's take a look at what we have. We're going to take a look at a couple based on time, but look at this as Autozone, prior uptrend, consolidation area, OBV line up, relative strength is up, and look at our position here, right up the top. Really a little small breakout relative to this climactic action that initiated our structure. What do you think there, Professor?
Very tremendous candidate, very large cause, goes back to the beginning of the year. I would love to see maybe a little bit of an LPS, or here on this pullback that it gets real dull and quiet and doesn't show any volatility, which I think would demonstrate that it wants to go higher. And we also have the backdrop of OBV, volume, and relative strength, which is very important. So tremendous candidate and very interesting.
Let's take a look at our next candidate, and that is Lilly, the pharma company. This one is even more convincing in terms of its structural position. We see that it's really backing up action right here relative to the buying climax. We had not a spring, but a very convincing last point of support there, down to 283.11 and up. So we have our prior uptrend, we have our consolidation area, positive slope, OBV, and relative strength. I like this one, maybe even more than the Autozone. What do you think, Professor?
Yeah, it's really interesting, and I like it a lot. I like the pharmaceuticals in general, and certainly Lilly's one of the leaders. I would be very cautious of the recent gap at the highs, which has a bit of an island there at the new highs. And so what we need to see next is the inability to pull back much on any kind of a pullback, or the inability to pull back at all, but just go sideways and then start to advance again. So it looks a little excited at that breakout level, but that's just sort of a near-term nuance that we want to keep in mind. And then we want to do the point and figure count to see how much potential. Note how in both those cases of these examples, they're reaccumulations, which we had shown in a schematic of that. Pretty interesting.
And only 2 scan terms, relative strength, OBV. Look what we found. A lot of frogs kissed to get here, but.
Well, look at how you were able to look at 50 stocks and come up with a couple of really great candidates. And there's other great candidates in that list.
Yep.
But here I am looking at 500. I like to do that because I like to see what everything's doing. But the 500 is very important. But you're showing a tremendous efficiency here, John.
Well, see, your class would be look more, see more.
Yeah, right.
This class is look less, see more.
Yeah, right. Exactly. John, thank you so much for being here and for showing us the scan. Plug that scan in, everybody, and we will see you next time.
Thanks, everybody.
Thank you, John.
Hey guys, Dave Keller here with StockCharts.com. Thanks so much for watching our video. If you enjoyed it, and we hope you did, hit the like button right below. Also, we have so much new content every day. Consider subscribing to the channel. Just hit the subscribe button in the video or right below. Thanks for watching. Stay safe. Have a fantastic day.